the weekend, China pulled out its biggest gun they have as far as the monetary policy type of issue here. Here's a chart showing short-term interest rates from China's central bank over the past, this is back since 2004. And as we can tell, we're back up to 5.81% is the current new one now here. So bottom line is we gave the worst news that kind of broke this market back in November, and yet this time we actually closed to new highs for corn and beans. So key point to kind of keep in mind here. As far as some other things we have going on here, Ryan actually made a good request that he asked me today, what about this these changes we can expect on the January report? Is there any type of trend we can look at? Just went back for the past 15 years as far as corn yields, for instance. No real good trend at all. 8 years up, 7 years down. And interesting, they only went maybe 2 or 3 in a row, and then 2 up, then 2 down. So kind of interesting how there's not a great pattern to work from here as far as statistically. Also did some work looking at yields. So we've had a good decline since the summer high in yields to the November report. In this case, it's about 7% drop from the summer high in yields down to November. We got 3 other years very similar to that in terms of the percentage drop. And I thought, well, here's these other 3 years, what happens to the January yield number here? And as you can tell by these red bars, not a solid trend here either. One up 0.2%, one down 0.2%, the other one up a good 1.9. So I don't really call this any statistically worthwhile number here. I will point out, though, that these numbers equate to very moderate changes in production and potentially a large change in production here. But I'm not going to use these numbers to make our estimates for January's big summary report at this point here. It just doesn't look like there's a good correlation at anything right now as far as the corn production changes here. But as far as some of the drivers we have going on right now with corn, obviously, as I continue to mention, Brian's making a great point and pointing out RBOB. In fact, I happen to throw this up here today for our charts as well. The blue line here is the RBOB. Bottom line is, as long as gas is rising, it's still going to allow ethanol to show its continue to increase as well here. Also, very interesting to point out the fact is ethanol is almost equally priced with gas, even though it has a much less energy value and therefore should have a lesser price than gasoline right now. So good point to note that we still have demand draw. They are pulling ethanol forward as far in terms of prices. So ethanol is still a bullish factor for corn, not a bearish one right now. Lastly, so to say more with the corn commentary, I want to point out, Paul had asked, well, how about this fertilizer problem we have right now? Fertilizer prices are obviously a little higher than last year. Is this a good time to hedge with natural gas? And why we look at that is about 70 to 80% of fertilizer's price comes direct from natural gas prices. What's kind of unusual is we are still noting kind of bullish expectations for energy prices, and that's shown by crude here. But natural gas is the only of the energy products which is really stable. In fact, in a little downturn right now here. So in this case, I guess if I had to make a recommendation, should our guys be buying natural gas futures or call options or something like that to offset the fertilizer costs? I'm not sure if it's going to be a great hedge this year. As I said, it's kind of interesting how natural gas continues to really do its own thing right now compared to the other energy complex here. So I'm not sure if that'll work out as much as we'd like it to, I guess is my message I'm looking at right now. Just want to put up a little reminder here for soybeans as we talk about this Argentine issue. And we're going to talk about a couple things going on right now. I want to point out where these key provinces are because we're going to hear these names in the news. We're going to hear our different weather guys that we monitor talk about some of these provinces. Just want to point out as far as Argentina, you've got 3 main provinces. These guys do about 85 to 90% of all bean production. Number 1 is Santa Fe, even though they don't have the largest percent, but they have the widest reach here. And then you've got Cordoba to the left, and then one right next to, in fact, off the ocean here, you've got Buenos Aires. So number 1, we've got these 3 provinces laid out here. Another thing I want to point out to you guys here is this is still pretty early in the growing season for Argentina. They go through flower here starting next month, fill, which we call that pod fill in March. So blooming, pod fill, so you're really looking at mid-February to kind of early March to make the key yield determining time here for soybeans. So the fact that we're getting really excited about this stuff right now, early in the season, there might be potential for more here later on. And as far as this chart, if you guys ever watched any satellite images of Brazil, or of South America, here's what you've been seeing for weeks and weeks. Brazil getting scattered rains just like this, and here's today's current image. Here's Argentina, and in terms of where those provinces are, here's the coast right here for Buenos Aires, and you're looking at it right here off the coast right here. So all that soybean producing region has been almost, this satellite image has been like the exact same thing for weeks and weeks. Nothing as far as precip and any solid numbers right now. So it's kind of interesting to point out where that is so you guys can start watching this from now on here. Over on the wheat side, we still know that wheat is still a bullish factor for us right now. The fact as far as the plains, we do have a couple of light chances for precip later on this week. I want to just point out again where we get this, these key areas for wheat is soft red winter wheat, the Chicago contract. Here's the areas where that's grown. Hard red winter in the plains, mostly central and western portions of the plain states. At this time of year, we've got a couple of things going on. We want to see moisture, but we also want to see a little snow cover to help kind of blanket the crop from the cold temps, which are going to be hitting here in a few weeks. As far as the snow cover, I want to point out that really those central and western areas right now, where we said the bulk of the product is made, those don't have any snow cover right here. So kind of keep that in mind here. So wheat, even though there is a little precip issue going on this week, we still don't have the moisture we need in the big picture, and we also don't have the snow cover either. So in general, we're still very supportive on this market, or on these grains. Still looking at corn. 650 is still our objective. Puts them just a very short hop and a skip away from today's trade. As far as beans, our 1375 master overall upside target was reached today. That does not mean we're selling at all, though. This is still a bull market. And as I noted with the Argentine comments, we're not even in the thick of the big scary time yet for soybean yields down in Argentina. So we've hit our upside objective. We're not going to change that right now. At this point, we're more or less in the free. This is free money right now. Anything from here on up is free money. So we're